Welcome back. Sauce Factory Wednesday, baby. All right, yeah. End of the year, last month of the year. We're gonna be talking about some 3 days of breakouts. We get your first red day in there, and we talk about those reversals coming at the major levels get sweep. Don't get swept. No, you'll see when you get those peak formation, those extended market ranges, what happens when prices get a little bit besides themselves. All right, when they get a little bit overextended. This happen in all markets when price get overextended. You can kind of tell when the reversal's happening. Or if you misjudge it, it is what it is. Don't over leverage. Don't run back into the market trying to nail a trade and keep trying to drive the point home saying, hey, I know I'm not, I know I'm not wrong. I know I'm right. I keep going after this trade. Most people attack trades too aggressively when you may make a mistake getting in too early, getting in too late. It happens to the best of us, right? But you don't have to keep trying to beat that dead horse to try to prove somebody right because it's only you in the market. It's only you versus you. So you don't have no point to prove nobody else except yourself. And over trading just because you feel like you're right and you get that trade perfect the way you want to, it is what it is, right? This week I made some mistakes in a couple of trades I took, and I know for sure I was gonna be keep trying to drive the point home and try to make sure that I proves myself right when I'm like, okay, cool, you wrong. Let's be wrong. Let's go and hang on by the day. Got other stuff to do. So without further ado, let's get into this chart, right? Right now we got the NASDAQ up. So this week it opened up with an explosive move, taking out last week high, which I got signaled here, right? I want to focus on this right here. And you pay attention to that. We just want to focus on this right here. So I was telling everybody on Sunday, I need to start, documenting that stuff so we can have it ready for y'all Wednesday. But I was telling them it was a high probability that we was gonna break down on Monday morning because of the trend we showed on last week, right? And what I mean by that is the signal of breakouts, right? So you look at it, Monday, December the 2nd, we just went straight out. Boom. We went straight up, right? Straight up trend the whole entire week. Okay. Well, what's happening is you got breakout traders taking it out every single day. So we're gonna find the Monday market close. I'll mark that level. Boom. And then that's what we're gonna do. It's gonna continue, and I'm gonna show you the 3 days of breakout traders, right? And that's what we want to focus on today is traders that's breaking out, doing what they do best, not caring about you or your stop losses or your, trades. They were just going up. Boom. That's Monday, Tuesday. All right. Got a Wednesday coming in. So there's reason why we track these days of the week, right? Because they mean something. Because the auctioning price always starts at the New York price close. So when the market closes at 1 hour, especially in the futures market, when it closes at 1 hour for that day, and it starts back up, well, guess what? It's going to start at the New York closing price. So we mark that out to see where price is going. If it's above it, then we pretty much going to keep trending upwards, right? We can mark out the day high and low. I always recommend doing that so you can see where your range is located at. But for time's sake, y'all can go back and watch other videos for that. But for now, we're just going to just do the closing price, keep it smooth, up out of here. Boom, boom, boom. So this Wednesday closing price, this will happen Thursday. This is the opening price. Guess what? Price closed below the open, right? So this is our first red day out of this trend because that's price open up right here, price close down here. Show you that with the cameras. There we go. Boom. So you see price open, price close. That's a red day, right? Now, just because we had a red day, that's setting us up. Shout out to Stacey Bird. So once you see that first red day and you had multiple days of breakout traders, right? Even at Friday, still broke and closed above that high, right? So now we're gonna mark out our Friday low. It's our Friday low. And this is our Friday high, which is the close of the week, right? You go back to the weekly chart. This line representing the top of the week. The high was Friday, so I'm not going to put an unnecessary line here. So from there, you'll see price opening up on Sunday. What? Where do the auction process start again? Right here. Boom. Boom. Auction and price. Friday close, right? Look what we do. We take out high previous week. Now, once we do that, with this very bearish formation, you got your even start happening here when a bearish engulfing, completely engulfing this candle. They only wanted was that high. With consolidation is what I always like to see. I always tell folks, when they consolidating, a big move gonna happen. We had multiple days of breakout. We finally had one red day. When they break out this channel, things gonna get ugly, right? So I like to look for setups like this. Get where you need to go. Then once you get there, I want to see consolidation on a 1 hour chart. And once it breaks down, I'm gonna be looking for my entry in my trading time frame. If I don't catch it, if the move happened during the London market, Asian market, if I'm asleep or I'm living my best life, I'm not caring about it. I'm just gonna have to come back another day, look for another setup. But if it happens during my window, that's how I know it's meant for me, right? Because it's gonna happen at your window. Now, boom, this is my trading hours when I enter the market. Typically, I like to be done between this window here from 8 to 10. So let's slide this up because I don't like how these numbers like jump up. But typically, this is my trading window, right? I have a very short window. Like I get a market about 3 hours, right? I get them about good 3 hours and I'm out the door. I'm coming to the market. I'm saying, hey, it's go time because this is when the volume start coming in. They're gonna start dropping news reports. The market already has a structure that built overnight. All this happening on your higher time frame. So you shouldn't go down to a lower time frame, but you don't have a clear setup, right? It's cool to go down to your 15-minute chart, 12-minute chart. Like they say, you want to kind of see what kind of market structure, targets, gaps, any patterns you may see on a lower time frame, so you kind of get some internal market movement, right? Outside of that, you shouldn't really care. You get what I'm saying? Because what's going to happen, you trying to see these small candlesticks, you trying to run, catch this, catch these different moves, and you're going to trick yourself out of a bag, right? But in reality, you just have to wait and look at the breakdown of the market. Now, everybody know I don't care to trade the NASDAQ. You know, it's crazy for me. Stop loss costs too much, but I will take it on the in the option market on QQQ all day, every day, right? I go get contracts over there. I like that because I can manage my risk better, right? If you want to say like, how can I do this? Well, guess what? Boom, you go ahead, mark that low because this what happened. All this happened during the London market. It was up, great trade for you, my boy. If not, it is what it is. We're gonna wake up, and all we're gonna do is I'm gonna come to the market. I'm gonna slap a fill, right? So I'm gonna come to the market. I'm gonna see the market move this made this nice little leg down. I'm gonna slap a fib and wait for a retracement in the golden area, right? So typically 50%, 61%. If we get here and we start breaking down, okay, cool. But I do know that you want to do the breakout trade. Well, you can take the zero level for the breakout trade, right? But you definitely need to see price get up to these higher levels because if they don't do a 50% retracement or greater, there's a high probability that the push down will not be significant and you can get hit with a reversal back to the upside. So I would like to see the very stiff breakdowns. Now, I want to see a pullback to the 50%, 60% or greater. 50% or greater, hey, I'm happy with that. Be smooth, right? Now, you'll say, well, they stop here at the 50. Why is that, right? That's when you got to start looking at your candlesticks. So we got a three candlestick order block continuation that formed right here. In on that. So you can see the top box. Boom. So you see this little candle? You got this nice bearish candle here, got a nice bearish candle here, and you'll say, like, what happened, right? Well, this was market structure that got broken. So this was the displacement candle. These two, they displaced price. So this is the zone of interest that price will like to target. So typically they looking for the displacement areas for them to target, right? So this be their zones. So boom, boom. Hint, that's the reason why they want to target these. So these are high probability, right? This candlestick, yes, this type is like the same pattern, but did it break market structure? Technically, no. This candle didn't even break market structure. It started right before this one, right? But this one went past. This one was a solid break and close, taking out that market structure and letting you know, like, hey, we gotta break a structure, boom, BOS, and we are shifting downwards, right? So when it came back, guess what? We just simply play the game here, right? Price came back, consolidated in the channel. So, you know, you get your news around this time. It's the opening bell, right? They doing all that funny stuff. Whoop, whoop, whoop. Price came back up to 50%. It's happening to also be an order block. So you can play the game of, you can set a limit order here or wait for price to leave out, right? We are not a fan of taking unnecessary risks. So let's bring this take back a little bit, because what we're about to do is drop down to lower time frames. So let's get down to this 3-minute chart and see if we can dissect this. So you can take your time, be smooth with it, right? They're gonna give you a couple of fake outs, like here, they got there, and you're like, okay, cool, that's fake. But 9:30, you know that's when the market opened. You don't really want to mess with that. You ain't gonna get that trend, right? You can take that risk, maybe yes, maybe no. Or you can be a little patient, because on this very next candle, you would have took that. Boom, what they did, they took your stop out, right? They playing games right here. It wasn't done. They got right to the 50%, but they didn't get to the 50%. You know what I'm talking about? All right. So once they got there, guess what? Boom, candlesticks failing to come back. Boom, boom. You can play it smooth. You can go ahead, look for another candlestick entry. It was an ugly entry, right? Because you got all this choppiness on the way out. Then it finally smoothed out and never came back. It finally got the hint. Done dollar went straight to 6.8, right? Negative field anyway. So what you could have done was, I say, hey, this counter break in, next counter goes through, I'm out. And my stop loss is the pivot high, which is kind of risky. That's 77 ticks. You know, you get it how you live. But see, negative fib, right? That is 473 ticks. But we know price like to go back to a previous day, especially if they took out a major level, which is a weekly level, right? As you see, that's the reason why we mark out the high and low of the previous day, because price will go back to those points and take them out. And you'll see 760 ticks on the table. So if you got to risk 70 ticks for a proper stop loss, right, you might want to do it. I don't know what your pocket's looking like, but for risks like that, maybe it's worth it. You got to ask the question, is it worth it? Sometimes, yes, that is the answer. So you look at it, right? If you took this entry, price pulled back 64 ticks. So you was kind of like a little nervous. You know, you over leverage, that's your account. So manage your account properly. Don't over leverage yourself like that. Get your head whopped off. Get you going to drawdown like that, right? Another thing you could do, go on a smaller time frame, but you want that perfect entry. It ain't always going to be the case, especially when you got NASDAQ that going crazy like this. Is why I like to get gold improved, because they're a little more smooth with it. You right and wrong, they ain't that choppy. But a 64 tick drawdown for a 760 tick gain, hey, I take it. That's a great win, right? So that's the breakdown of the NASDAQ. Now, NASDAQ wasn't the only one, so let's touch on ES, because they did the exact same thing. So we're going to touch on them. We want to go to the option market, and I'll show you, because these are derivatives, right? The futures market is the real one. The option market, like the SPY, the QQQ, or ETFs, but typically they do move with the same type action. Okay? Okay. All right, so we at with a vote. Same concept. But this time, if you look at it, we back over here. They didn't really go up that high. So on the ES, which is the S&P 500, you had got a failure swing at 2 a.m. London. They failed to take out the weekly high, and it is in dump, right? But you look, it was the exact same setup. Oh, oh yeah. Oh, first red day. Told a couple guys this on Sunday. I was like, hey, this is what these my predictions, right? And you already know we got the I ain't gonna do it perfect, gotta get the vibe, just kind of marking it out. So anyway, boom, boom, boom. Multiple days of breakout. Once again, you just mark out your Friday low. You always want to mark out the day high, low. It helps you track everything, right? And then once you go back, that's Friday. Right? Don't worry, I ain't gonna start a solo this thing. I ain't trying to hold it out all day. I'm trying to get right to the point, get you what you need. Mm-hmm. Yeah. So as you see, price done a peak formation around the previous close, around the started auctioning area, right? They did their peak formation, price fell, 9 o'clock, boom, she slid right out the cracker. No look back, it's done for the day, right? So you really want to look at it. SOS, you run the field, you get to the market about an hour, 2 hours in advance, so you can be prepared for stuff like this. You don't want to be just dragging up. I want to get here right at the bell. No, you get here early and you get ready. You always want to be first to the party, first to come, last to leave, right? That's how you get the edge on folks. But there you go, 50%, almost 61% retracement, right? Boom, boom, boom. Feeling to get higher than this, so you already know what time it is. You just need a good entry. Take them to the dirt. Y'all can go back. Y'all see the dates. This happened this Monday, so you can go back, break it down, get into the crevices of it yourself, see what you could have done better. But a simple fib, look at market structure, look for the setups, simple fib, waiting on the retracement, and you get it how you live. So let's scroll over to QQQ real quick. As that low, you got any questions? Anybody got any questions? Let me know. Oh, oh, this week and Friday. What boom, right? Like I told you, Thursday breakout. It's Thursday. See, price did that. No form, right? See what time it is. Wednesday, they said we're gonna gap up, gonna do the food. Same thing on Monday. Yep, yep. Everybody did what they supposed to do, right? Everybody say we're going off, going off. Thursday, look where they closed. Price open here, right? That was your first red day. Price closed below the previous day. That's a red day. See what I'm talking about? So same in the futures market. It just the chart looked a little bit different on the option market, which is stock market, right? Stock look a little bit different. Chart look just slightly different, but you see the same said setup. I pay for all this premium. We're gonna do it side by side. I got all this premium action. Oh, okay, cool. Appreciate you. Thank you for telling me. All right. So we're gonna go NASDAQ. They got my drawings there. So we got Q's over here, NASDAQ over here, right? Boom, boom, boom. Let's clean this chart up. I want y'all to see this. Clean that up. Boom. I already know the breakdown. Boom. See? Exact same chart, right? In theory, not mirror perfect, but the setup is the same. They do the same thing. Break out multiple days, got your bear day, then they're gonna break out again. So they'll trick you to believe, like, hey, we're gonna go long, but they actually reach their objective. It's time for them to pull back. They can't keep breaking out to one direction forever. It doesn't work that way. Once they keep going along that path, eventually they're going to say, okay, cool, everybody expect us to go long again. Well, let's trick them. We're going to either get them with a spike up, and then we're going to drop it, or we're going to spike down, and then we're going to pop it. One of the two. They can only go two directions. Sideways, them just going both ways and saying we're going to close the middle. But they really only go in two directions, right? So same how they popped here. Oh. So these, of course, these, it's a continuation chart, slightly different. Oh yeah, this one ain't on replay. So that's what happened this week. Where my Monday? Boom. There we go. See, Monday. Okay, you see how they boop, drop, took out that Friday low. You can't make this stuff up. Okay. Tuesday they ran down a little bit lower, reversed with that that news that came out today. I can't even remember the report name. It is what it is. So yeah. Wait for the setups. Don't be tripping with yourself. And when you have them, take full advantage. This stuff works. You just wait for your setups, give yourself some time, and when you see them setting up, you see, all right, price did something funny. It interrupted the trend one day. Wait for it. The play is going to come. You just need a good entry. Focus on patience. Focus on the setup. Don't be taking science projects out here. Don't be out here clicking that button 40 times in a day, 14 in a day, 100 in a day. I know some people, they putting jersey numbers up on a board in these trades. I don't know how in hell you find that many trades. I don't get it. I don't see them. It'd be like one good trade to me per day. It's maybe like 3 good trades per day. But you're there all day long, you got to ask yourself, you're doing something wrong. Okay, you need to find one solid trade. Boom, boom, boom. Preferably, if you want to trade every day, you need to find one solid trade on a different instrument. Let it set up. Take advantage. You ain't going to find the same solid trade on the NQ, the ES, gold, crude, whatever foo ticker you want to trade. I don't care. Crypto market, you ain't going to find a solid trade on the same ticker every single day. You are clicking buttons. So you find a setup, take the setup, and, manage your risk. Don't get crazy with this. Fine. Okay. My setup, my alert going off, like a pager or something, and you thinking that that's the right thing to do, that you clicking that button 10, 20, 30, 40 times, thinking like, hey, I'm really trading. So no, you're gambling. All right. You playing games, you gambling. That is not a setup. A real setup don't happen that often. Look for the A+ setups. Get out the smaller time frames. Get rid of the stress. Get rid of the ego. Admit that you're over trading and learn and grow. It's the only way to grow is learn from your mistakes. But by doubling down, tripling down on these bad habits, taking these bad habits into the next year, it's only 2 more months left. And this is the last day of October, okay? So really only 1 month left in this year. If you take them same habits into 2025, because it's already here, folks, if you take those same habits into the next year, then you need a wake-up call, okay? You need a wake-up call. I'm going to say what I really want to say. It's going up to YouTube. Make sure I like, subscribe, and comment on this video. I appreciate that. But you take these same habits into the next year, and you're going to keep complaining about why me, but you refuse to let go of your negative ways. You refuse to let go and grow. You refuse to humble yourself, get rid of the ego, and say, hey, maybe I should change things around. Maybe I should change my plan or actually follow my plan and stick to it, right? If you lose more than 2 trades in a day, shut it down. 3 trades, shut it down. You shouldn't get past 3. You suck, okay? Number 4 ain't going to be the magic bullet. It's not. Shut it down. You're wrong. By the time you clean up the mess you made on the previous 3 trades, plus the fees, you still in the hole. You keep that up, you blowing your accounts. It's no magic bullet. If I'm wrong one time, I'm shutting it down. I only take me one time to say I'm wrong. I'm logging into my paper trade account. I'm gonna make it do what it do. If I'm right there, okay, cool. That means be patient, learn from your mistakes. But I'm not gonna keep tricking off on a broker with these fees. I'm not gonna keep giving my money up just to prove a point because my ego hurt. I'm not doing it. Okay. I highly recommend you take your loss. You're wrong that day. Shut it down. Be intelligent. Come back tomorrow. If you really believe in your trading skills, you should not have a problem coming back the next day because the market going to keep opening. Matter of fact, the NASDAQ, the New York Stock Exchange, they trying to keep that open 22 hours or 23 hours. They're trying to match the futures market. So really going to take it 22 hours a day. Opening on Sunday, closed by Friday. 22 hours, right? So it's even more trading they're going to try to get a place. And I guarantee you hit that button and y'all fall for that trap, you ain't going to be on these Wall Street streets no more. You're going to be out there having a GoFundMe trying to get another account. You're going to be begging for money. Yeah. Yeah, you're going to need somebody to spot you some change to help you get another, account for another challenge. Get you another challenge account. Yeah. Yeah, they're gonna have to set up rehab centers for Apex with all those cheap accounts y'all keep getting. Now, get it together. Tighten up. Don't take the habits into next year. Learn from your mistakes and grow. That's it. It ain't no other way around this. You can't. Yeah. Thank you, Rob. At the end of the day, who you giving these profits up to? You feel me? Like you keep doing the same thing, you're gonna keep getting the same results. There's no way around it, right? If you keep clicking that button because you refuse to sit down, take a break, learn the mistakes, review your charts, look for your best trade setups. Typically, we do this on Wednesday. Y'all can raise your hand about it, put it in the chat or whatever, unmute. After Wednesday, how many good trades is it? Maybe one by Friday? Is it one in Thursday? Y'all tell me if I'm tripping or not. That 100 tick move on gold, that 100 tick move on oil, that 100 plus tick move, that 1,000 tick move on any other tick. Talk to me, bro.
Happened real nice on Tuesday.
But after that, what happened after that?
After that, it's up in the air, depending on news.
Exactly. It's up in the air. It's fairy dust. It's foo-foo. Once it have its good moves, it's dead. It's done. That's it. So when you keep carrying, trying to beat that horse and say, I'm going to trade every single day, all you're doing is subject yourself to losses, mental damage, and fees. Tricking off on the market. You're messing up your mental health. Now you're crying in mindset on Saturday. I'm enjoying a coffee. Enjoying my Saturday. Being bougie. My pinky out. Sipping. Expensive coffees. Being a coffee snob, what they say. Yes, it's mine. I'm having fine discussion over different beings from different regions of the world. That's how I like to spend my Saturdays. But if you want to have emotional damage, keep trading like that. Yeah. Keep trading like that. All right, and that's my piece.